streaming. And so I can welcome everybody again to our Saturday, November 2nd International Online Forum. That's our official welcome. We are underway. Everybody can hear me okay, and that's great. My name is Stan.Heller, consultant for VectorVest Canada. I've been a subscriber to VectorVest since 2003, and since my retirement at Freedom 55, I guess, in 2008, I've been privileged since 2010, 2011 to teach a few workshops for VectorVest, and I absolutely love it. So great to have you all with us. During the webinar, we will have our chat box open for you. You can type your questions in here and any comments, and then click on the send button. We'll get them. During the webcast, the chat box should collapse and just show this orange arrow so that you've got more screen space, and then you click on the orange arrow to open it back up again. And we're very fortunate again to have Mr. Bill Shelton, team leader and senior instructor and support representative from VectorVest in Cornelius, helping us out in the background today, answering your questions and flagging some of them for us to answer later in the day. Yeah, Pat says, retirement, question, question, question. Yeah, some weeks it doesn't quite feel like it, Pat, quite busy, but it's all good and I love it. And just a quick risk disclaimer, we will be looking at strategies and stocks today, and so there is risk in investing, and everything you will see in here today is provided for educational purposes and should never be taken as investment advice. Only you know your personal goals and financial situation and risk tolerance, and so the information today is designed to empower you to make your own investment decisions. All right. Yeah, gosh, lots of folks coming in. Dale from Calgary says, thanks as always for doing these great informative sessions. And we have Bob from Cleveland. Another Bob from Kansas. This is only his second international webinar. So there you go. All right, so let's move on. Bob was asking about the hot stock picking contest, if we're going to look at some of the unit searches. We're not going to spend much time on that today. Dr. Lito covered the winners quite well in his essay, and then it was covered again in the market timing report. So we probably won't spend too much time on that today. Our purpose, though, is to further your knowledge of the VectorVest system. That's the purpose of these international online forums, to share current ideas and strategies for making money and protecting wealth. It's always great to hear from fellow investors who have their real money in the market and their real ideas for stock picking and strategies. To create opportunities to interact and share ideas with other members of our VectorVest community. Promote the meetings and activities of our VectorVest user groups. I love these international online forums. However, when you have a chance to get together with fellow investors at a user group meeting, that is something really special where you can share ideas and do some stock analysis, market analysis with your fellow investors from your own community. So if you're near a user group currently, do consider attending. It'll be well worth your while. And if you're not near a group and you think there should be enough members to start a group, maybe you would get that going, and I'll show you on a slide later on how you can start that. And then finally, our goal is to provide a forum for VectorVest investors who do not live near a user group community. All right, so it looks like everything is on the go. Everybody can still hear me okay, and well, let me just make sure the slides are moving along. Looks like they are. Peter says, unfortunately, no groups in Germany. Yeah, and John is our user group leader in Kingston, and he says he's joining us from Winnipeg, so that's pretty cool. Larry's with us from Milwaukee. We've got a great turnout, so thank you for that. And still people coming into the room, and that's just fine. All right, so our agenda for today, we are going to review the color guards from around the world and do a quick strategy and market highlight session for Canada and the US. And our special presentation, very excited to have Mr. Tom Van Nooyen. He is the former user group leader in Belgium, and now he does workshops and trade show presentations throughout Europe. And we're so fortunate because he's already done a workshop this morning all the way over in near the Netherlands there in the mid-Netherlands. So he's done some driving already today, but really pleased that he's able to join us and he's with us already. And again, we are live streaming our VectorVest forum on the YouTube channel. And this is the link for the YouTube channel. All right, and then very pleased today that Tom has made available through VectorVest Marketing a very special offer. It's to try VectorVest Europe free for 30 days. And there's no credit card required. You can just sign up and take advantage of the offer and have a look at what's going on in Europe over the next 30 days. You'll see some presentations from Tom and from Susan Hayes-Cullerton, the managing director in Europe. You'll be able to read Susan's essays, which are fantastic. She did one this week on options for protective puts, and you'll enjoy that. So just an opportunity to try it out, see what you think about it, and if something you would like to do is trade in Europe, then you can call VectorVest and ask about continuing on, and that's the link there, and I'll chat it in after I get off the mic myself, vectorvest.com/try EU. So again, it's no cost to add a country to your VectorVest service. Yeah, Richard, you would have to find a broker in US or Canada, or if that's where you are, to set yourself up with a Europe account. I haven't tested it out to see who's available in Canada to do that, or you could get a broker in Europe as you're suggesting there. Oh, Cynthia, this is awesome. Says Kevin and Cindy from the Boston User Group. And she says Glenn Tompkins, one of our esteemed and senior VectorVest instructors from North Carolina, is coming to present at November 14th meeting in Waltham, Massachusetts. So feel free to invite anyone in the Boston area. That'd be awesome. I know you'd love hearing from Glenn. Kamel says a very colorful instructor, and he really is. He's got a whole dictionary of words that he uses to describe markets and stocks. Tom, by the way, from Burlington says, I think with TD, the TD Waterhouse online broker, we can trade 6 countries and currencies unless that has changed. So that's something to look into. And Kamel says those are Glenisms. And Mike, by the way, says interactive brokers in Canada can do trades on the international exchanges, including Germany. That's awesome. Thank you, Mike. I love that about these meetings and the user group meetings that you go to. You learn a lot. Thank you very much. All right, let's move on. And we want to look at the color guards because there's been something very positive happening. We now have 6 of our 7 countries that have received a confirmed up call. Unfortunately for us in Canada, we're not one of them, but we're closing in on it. We just need the MTI, the market timing indicator, to get above 1, and it has been fairly steadily rising. And importantly, the buy-sell ratio has started to rise. We just recently, just 2 and 3 weeks ago, had just barely over 100 buy-rated stocks, and now we have over 300, I believe it is. So we're moving up in that regard, and we've got a green light in the price column. We have a primary wave up, which is the first indication of a potential sustained uptrend. The underlying trend in the second column here, if you can see my mouse over here on the left, is still down. So a little bit of caution is advised, but the color guard is mildly bullish. VectorVest advocates caution when buying stocks at this time. And a little later in the presentation, I'll show you why it's important if you're just a little bit more prudent to aggressive to start stepping into your good quality stocks when the buy-sell ratio and the MTI is extremely low at these levels. It's a good idea to just start stepping in, and then once you get the confirmed up call, you do want to be fairly close to fully invested, and or at least preparing to do that. You can get a whipsaw such as we did with our last confirmed up call, but in Canada especially, I would say those confirmed up calls have been very reliable indicators of a sustained trend. So take advantage. We're up 15.86% year to date, which is excellent, of course, and a lot of those gains came from January to May. In May, we got a confirmed down call, but a lot of these gains came in January to May, and then the market's been going sideways ever since. And Paul is just commenting we did get a DEW signal yesterday. The DEW is our second slowest, most conservative signal, and we did get an up signal on that yesterday. That's a detrended price oscillator, envelopes, and the 30-day weighted moving average. So thank you for that, Paul. And on the US side of things, we got our confirmed up call on October 23rd, and lots of green lights from there. The MTI has been fairly steadily rising, as has the buy-sell ratio, and the color guard is somewhat bullish. And this is the most bullish statement that we can get in the color guard or the market timing gauge. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time, and that's the VectorVest philosophy. Australia, the color guard is neutral. You can see they've got the best year-to-date performance at 21.09% for the Australian market. Some green lights here with momentum, then a little bit of slowing just recently, but still buy-sell ratio 0.52, so very strong and rising. And then the MTI at 1.04. Right currently, it's a Monday. VectorVest does not advocate buying any stocks at this time, so just be cautious on Monday and see what happens from there. The UK up 13.27% year to date, confirmed up call on the 24th of October. All three red lights across the top giving us the needle on our sort of traffic light on the market here, the market timing gauge fully into the green, and again the most bullish statement we can get. Singapore, they were negative at our last meeting, and now they've pulled into positive territory. They got the confirmed up on October 24th. Just be a little bit cautious here. VectorVest is advocating caution next week with this timing gauge. Europe, Tom will speak about the importance of the color guard and market timing in Europe, but the color guard is bullish. We've got 3 ticks into the green, 3 green lights across the top, and momentum with the asterisks telling us that the relative timing indicators have crossed to the upside, so everything is very bullish in Europe as well, and a nice 16% gain year to date, and again a lot of that gain coming from January to May. Hong Kong also in a confirmed up call, and they got that on October 28th, so starting to percolate there a little bit to the upside, and the color guard is mildly bullish, so a good time to be stepping in and replacing some stocks. Okay. And Tom's asking about where might be the best place to go with money sort of out of Canada. Well, and Tom is a Canadian resident. You want to be diversified in your stocks, your industries and sectors, and you want to be diversified in your countries. And typically in Canada, VectorVest would certainly suggest having some exposure to the U.S. market. There's some incredibly strong stocks there, incredibly strong sectors, And so you do want to have a US account and get set up there. Certainly there is some currency risk. The Canadian dollar is rising right now, which is a good thing if you're just opening an account, but the opportunities and the great companies that we have available to us there more than make up for any currency risk. Okay. All right, so that's that. I want to move on. Folks, I hope some of you have set up these ETFs in your watch list because we've been watching them, of course, all year in these international forums as we have for the last several years. And once these stocks get going or these ETFs get going, there's some terrific opportunities here. Now in Canada, EWC, again, our VectorVest composite in Canada is up about 15%. This ETF has managed 23.96%, and it's been pretty steady up. So just worth watching. And Greece and Russia, surprisingly to me at least, that Russia is right at the top with a couple of these ETFs. But these are really outstanding gains, and the RT is going to be your best friend in knowing when to get in and when to get out on these ETFs. So anyway, I always mention it. These are your leaders up at the top, and these are sort of the countries that are struggling a bit here at the bottom. Howard, it's very easy to create your watch list of these ETFs, and you can certainly add others and delete some that you're not interested in following. That's fine. And by the way, I just noticed here we have FEZ. That's a new one that I added. It says Australia. It's actually the European Stocks 50. So it's the European Stocks 50. I'm not sure how they got Australia in there, but that's the beauty of computers. Yeah, Barry says sometimes there's so much gapping action on these countries that it's hard to know when to jump in. There can be, but because they're ETFs and they're tracking entire indices, I think you might find that the gapping is a little bit less concerning than even with. Let me just put a couple here into the views. So there we go, or to the viewers, I should say. So let's just do this. So I've got the viewers tab open, the stock viewer. And let's just have a look at Greek and ERUS, EWC. So I'll just take a look at a couple here, okay? And then we'll graph them. And let's just go to our VectorVest layout. This is the second one in. And so here, relative timing early in January crossed above 1. Price crossed above the 40-day moving average. And the 40-day has held fairly well as support going through. The RT did cross below 1 just briefly here. Certainly on this little downtrend, you could, protect a little bit. But really, what I look at is the slope of the 40-day. The strength of the RT, everything was looking positive right up to about here. Then we did fall back a little bit, and then we got the RT above 1 again, and then we rose up from there. EWT, same kind of a story. The easy money was from January to about May, and then here's that gapping action that Barry from Halifax was just talking about, and it did cross below the 40 days, so you could take some risk off if you wanted to there and sell there, and then come back in when RT crossed above 1, get another little nice run. And you don't have to wait even for the third red candle to take some profit and then come back in when you see RT above 1 going again. And there's Greece. This has been even more steady than some of the others, although it had this pullback. But the RT, again, very reliable. When you start to see the RT hitting lower highs, you might take some profit off the table. That's not a worry. And then there's Canada. I thought I would show that. So there's the RT crossing above 1. Pretty nice rally again, you know, until that confirmed down call. So there was the confirmed down in May 8th, and a little bit of a struggle from there, and it's been pretty much sideways ever since. The easy money was early January to May. All right, so the RT, though, very, very valuable in looking at ETFs especially. I mean, it's valuable for anything, but yeah, Barry says, is the RT more important than the new buy signal? With ETFs, I would almost say so, Barry, because with ETFs, it does take a little bit longer to get a buy rating from VectorVest. This one came on January 18th, which was pretty much the confirmed up call, right? So it does take a little bit longer to get a buy with an ETF. So I don't think you have to wait. But if you did buy there, took a nice profit on the hold here, you might not be stepping back in. All right, I want to move on. I want to give Tom lots of time for his very exciting presentation coming up. Let's cross out of that, and we can move that over there. All right, so the market timing, always good to read the strategy sections. I mean, I hope you read the whole market timing and everything else, but the strategy quite often gives you little insights. So here, VectorVest is just noting that the composite index for Canada moved higher for the second consecutive week. Price of the VVC-CA has been trading in this tight channel, and we are once again near resistance at 21.89. So there's 21.89, and we're just right there with, again, overhead resistance, even if we get above this one. So this is a real pivotal point for Canada. We need some, some strong price action to keep it going. I'll just note here the one-day winners and the 5-day winners. We've had a lot of bottom fishing strategies in the one-day winners, and notice marijuana stocks is in here. And in these bottom fishing strategies are a lot of the petroleum stocks starting to percolate as well, and gaining some strength. So with what's going on in Iran and Syria, I would keep an eye on those petroleum stocks. Keep an eye on the watch list or the index, whatever you use to track them, but they're starting to move. Jane, that EWC, all of those ETFs are on the US side. Sorry, I should have mentioned that. These are all US ETFs. Unfortunately, we don't have anything quite the same in Canada, in the Canadian market. So these are all US ETFs. Thanks for mentioning that. All right, and then my essay was just all about, this is from the most recent Friday, was all about automating your trading plan with a great watch list and sort of the lessons I learned, and that was the earlier you step in and buy quality stocks when the market is rising from a significant bottom, the faster the gains start to add up. And you can see it on the graph again from January to May. It was pretty easy money, and then from there it's been difficult. Even though we had some market signals here, the GLB RT kicker in this graph in the bottom right, they were getting green lights in the price column, and the RT kicker was positive or bullish. These stocks kind of lost some ground, which was interesting. These are the dividend payers, but a nice 24% gain even as of Friday, and that doesn't include the dividend payments that were coming along the way. So we have in Canada the master retirement watch list in the special watch list folder. We run 8 of our very best conservative, prudent, and retirement searches every Monday night, and create that watch list updated every Monday night. It's a pretty terrific watch list for Canadians for sure. For consistent returns, only buy stocks that are rising in price, have rising earnings, and ideally a buy rating and a rising slope. A VectorVest exclusive 48 moving average of RT puts probabilities on your side. So that's the Midas touch criteria there, that the 40-day or 40-week moving average of RT is rising. And then having sell rules is essential for locking in gains. Here, to automate this, instead of looking just at the graphs, I used a 25% gain, or 25% trailing stop, I should say, and a 10% maximum loss. Todd Schaefer in the Color Guard report for Canada did an excellent job of explaining all this. So have a listen to that. And there, if you do want to try your own back test, here's the settings that I use, and I did execute this test in weekly mode because I just didn't want a lot of work. The results actually are better in daily, but this is just looking at the stocks on a Friday night. All right, so it's all there for you. The search that I used, filtering on that watch list, the 40-day moving average of RT greater than 1, earnings greater than it was 2 quarters ago, 26 weeks ago, and the recommendation equals a buy. Pretty simple search. I went with 16 stocks for diversification, and it worked out really good. Bill, yes, typically the essays are posted on the Canadian blog, VectorVest.ca, and then just go to the blog. Sean asked, do you trade stocks in a sector that's moving up, even though the main indexes are sideways or down? If I were going to trade against the overall tide, I guess, of the index, then I would definitely look for the strongest sectors. Yeah, and Kamel says you forgot to mention the sort, and it's RS times CI, so that that fabulous safety indicator times the comfort index, which is an indicator of resiliency and robustness of stock price over a long period of time. So that's a really good point, Kamel. Thank you. Mira Jim Penna has done a lot of work with retirement searches. The idea of running your favorite sort of retirement conservative searches came from Jim Penna in a July 1st, 2015 strategy of the week. So you can go back and have a listen to that. It was July 1st, 2015. All right. And then I just wanted to show an example of a weekly graph. So here's IAG. This is what you're looking for. Rising price. Obviously the market now is in that RT kicker up side here on January 28th when this stock was purchased in that automated back test. And the 200-day moving average in purple and the 40-day moving average in brown, and a buy rating on the stock. And from here, it's up 26%. So, and it's still in the stocks that are being held. Notice earnings per share rising nicely, and then there's that RT. For new subscribers, if you do nothing else but buy high relative safety stocks when the 40-day moving average of RT is rising on a weekly graph, you won't get into too much trouble, and you should make fairly good money, okay, in up markets. Yep, Bill, that's a 200-day moving average here in purple. You can see over here on the right the indicators. Okay, that's purple. Oh yeah, Bill, that's right. His comment is actually it's a 200-week moving average. I'm using a weekly graph, and so as soon as I go to the weekly, it's now a 40-week moving average and a 200-week moving average. So that's a great point. I don't change the settings, but that's what it is. So the 40-day moving average basically becomes a 200-day moving average here in brown. Yep, good point. And I use it because it works, guys. Just to have it on there, it just works really well. It's a nice guide, okay? All right, I'm going to move on really quickly here. The U.S. side, October, which really typically is not a great month in the market. This year it proved positive after a slow start, and VectorVest key indicators all moved higher for the week. So we've got a rally going. We have a confirmed up call, green light in the price column, and so everything is positive. The only thing that's a little bit concerning for a little bit of note of caution is just how close we are to this resistance level on the market timing graph, and you can just see it right here. But overall, things are quite bullish, and interesting that we had a lot of bottom fishing strategies again performing well on the US market in the one-day winners. And then the VectorVest views, I love the fact Dr. Lito took the time to just reinforce the mission of VectorVest and some of the exclusive indicators that are so valuable in stock selection and the market timing. So have a look through that. Everybody in our VectorVest world, I guess, all of our countries have access to the US, and this is really valuable information. And he gave some lessons from the hot stock picking contest. And of course, the Villages, a member of the Villages UserGroup, came out on top with a 43% gain. And Colorado Springs, I believe we're going to hear from this representative or this member next week about how he's done it, because Dr. Lito loved the equity curve, just kind of straight up. All right. And these were the amounts of the winners for those. And then Dr. Lito lists all the country winners as well. Yeah, Kamel and others are saying congrats to the winners. And yeah, so Jeff is saying he's really enjoying it, but having a little bit of trouble with the sound and quality. So if you've got open tabs, you can close them. That may help. And also, if you lose sound or lose the video, then just close out of GoToWebinar and restart, and you'll pick up where you left off. Okay. And just make sure you watch the strategy of the week, because Glenn Tompkins took us through and showed us a powerful way to find hot stocks this week. Here is where you'd find it on the market timing tab, the special presentation video. In the US, you have the daily color guard report videos as well. And in other countries, we have our market timing video that starts before the special presentation. And you'll see the hot stocks for Canada in that video as well. I think they were up just over 2% this week. So keep an eye on those. This is a new search in the US program, and of course we can duplicate this for Canada and the other markets as well. Things won't be exactly the same, but we can certainly duplicate it quite closely. But we'll all have it in our US program now under the cherry picking folder. Okay. Richard is asking, where do you go to find the searches for the winning portfolio? So let me just take a minute and go there. Just noticed I closed Canada and I've got US and Singapore open. Here's the US. So if you go to the Views tab, Richard, and you'll notice in the strategy section today, during the week it's in the market timing section, but there'll be a section that says go here for the competition results. Click here. That will open the results. And from here, for example, here's Colorado. And when you come over here to the details, the trading system. All right, where's that opening? That's not opening for me unless it's on a screen where I can't see it. I apologize. But that's where you would get the details and the, just not sure why that's not opening for me. Apologize for that. Not interesting. Just not going to open. That's where it is. Okay, I open the next one. There it is. So I open the next one, the third place winner. And if you click on the fill mode, that will give you the search details. So if they've created a new search for the contest, that's where you'll find it. Just click in this box. Okay. Yeah, Amin says Colorado was not using a trading system, so that'll be interesting to hear how they've done it. Yeah, so when I clicked on their trading system, they weren't automating; they were probably cherry picking stocks. All right, I'm going to move along here. If you want to start a user group, please contact Kathleen at our VectorVest UserGroup coordinator, and that's the email address. And of course, all the listings of the user groups are in the views. You can just scroll down or just click on the drop-down menu, go to the user group section, and there you will see all of our current user groups. And we've added quite a few recently, so the list is getting longer. I think thanks to these hot stock picking contests has created a lot of interest. And for those of you that can access our blog in Canada, it's VectorVest.ca, and you just click on the blog, and that's where you'll find my essays and also the forum updates and reports. And you can click on the forum to find previous forum presentations and the recording links as well. All right. Any last question before I turn it over to our guest speaker? Yeah, Mura, yeah, Colorado was not using a trading system, Kamel pointed out, so doing a lot of cherry picking. Erwin, I didn't see in the views any hot stock picking contests for November, so I think we want to keep eyes on that. Alberto says first time in the International Forum, and he's finding it very interesting. That's awesome. Oh, Chris is noting, and Bill's commenting already, that the hot stock search has been modified for Canada already, so we would have that in our cherry picking folder already in Canada, and probably the other countries then too. So that's great. And Luis is just asking what sectors are the best for the winter snow time. Well, I can tell you that HNU in Canada, the ETF, has been kind of percolating for natural gas. So that's an ETF you can look for. But just go to the viewers tab and click on the sector viewer. And if you're looking for the hottest sectors, there they are. This is the US. I closed my Canada for some reason, but it's the same for all countries, Canada, US, and the other countries as well. And building is right now ranked #1. So taking over from the REITs, the banks, the utilities, they've been up at the top for quite some time. So you can see some changes going on in the rotation of these hot sectors. Okay. But for example, from here you can right click on it and view the stocks in the business sector or view the industries in the business sector. You can see that the REITs equity have fallen back to number 63 on the industries, which is the larger group, but you're still going to see some great dividends and some pretty high quality stocks in there. Lots of buy ratings. When you open a sector or an industry group, you'd like to see quite a few buy rated stocks in addition to the one that you're thinking about buying. That indicates some strength. So the REITs are still looking pretty strong, but they've probably got some weak links down at the bottom. Yeah, they got some weak links down at the bottom. Still stay away from those. Stick with the quality. All right. Okay, just looking through last questions. Okay. All right. I'm wondering why in the world I closed Canada, but let me just just to let you know that if you have U.S. and another country, you can certainly open a second country quite easily. I'm opening Canada now, and I'll just do one little quick thing before I turn it over to Tom. Once I get this open. Camille says you close Canada because you want to move to the U.S. like in Canada. In Canada, yeah, in Canada, one of our petroleum leaders in gas and oil has moved their headquarters to the U.S. Just a continuation of investment struggles in our petroleum space here in Canada. Georgie says, if I live in Canada, can I buy a drip for my grandkids in the U.S.? I'm quite sure you can, Georgie. I would just call your brokerage and set that up. But you could certainly do that. I had the sector sorted by the RT is the default sort, and then I put on the RT ranking just a little closer to the front. I just moved it up there, boys. And Tom says, where is the hot stock watch list in Canada? It's not a watch list, Tom. It's a new. It'll obviously be a new search. Let's just see if I can. There it is. Whoops. There it is right there. So they've adopted it for Canada. Okay. Let's just see if they've already got it in Singapore, since I have it open and close Canada instead. All right, let's just see if we've got it here. And not here in Singapore yet, so maybe the other countries you can create it yourself for now. Call support if you need some help, and it looks pretty good. All right, I did a little bit of testing last night and really good results. All right, let's move on. Tom is waiting and he's got a great presentation. Introduction to VectorVest Europe. I'm going to call Tom in and just delighted to have him as our guest speaker. Let me just make Tom the presenter here. And let's just see if that worked out. So Tom, your screen is now showing. There we go. Thank you for joining us, Tom. And I know it's been a bit of a long day for you already, but very excited about your presentation, and folks are chatting in the welcome, and great to have you with us. The screen and the program is all yours.
Well, hello everyone. Thank you, Stan, for inviting me for guest presentation today here at the International Online News Group Forum. And thank you everyone for joining this webcast. So my name is Tom van Ooyen. Good afternoon to those who are in Europe. Good afternoon from cold, grey and windy Belgium. To give you a short introduction, who am I? What is my background? So my name is Tom van Ooyen. I live in a small town some 50 miles above Brussels. English is not my native language, as you will probably notice through the presentation. Now about investing. When I was younger than today, I always saw my dad reading investment magazines, following economic news from Belgium. My curiosity was there. I will start by myself. I will start investing on the way that there is a big crash on the stock market. Well, I started investing in 2008. It was quite a year to start buying your first stocks. Unfortunately, I started buying too soon. At that time, I didn't have VectorVest yet. Now, early 2013, I visited a VectorVest workshop in Brussels, which was presented by Susan Hayes-Sullivan, the managing director of VectorVest EU. I was intrigued, and not only did I get the trial, I immediately wanted to try it out, so I signed up for an annual subscription as well. I had an investment club, well, I still have it, in my local hometown, and we use VectorVest as a main tool for our investment decisions. Selection of stocks, stop loss, and so on. Now, in 2013, I also watched a lot of videos online and CDs as well, and that's how I started to learn how VectorVest works. September 2014, I started as a user group leader in Belgium. That went really well. After the third meeting, we already had over 25 attendees. The number of VectorVest subscribers increased significantly, and 1 year later, I was asked if I could present workshops instead of user group meetings, and I gladly accepted the opportunity. We first started in two places in Belgium, and 4 months later, in January 2017, I presented my first workshop abroad in Amsterdam, in the Netherlands, which are north of our border. 3 months later, the first ever Dutch webcast, which is called The Journal. And today, I'm a guest speaker at big investor events in Belgium and abroad. I also give presentations at Belgium Investors Club, which are always fun because we can show and convince non-subscribers about systems and VectorVest. I have to say, Stan, it was a busy day. I woke up this morning, I got up at 5:30, left Belgium for a workshop in Eemnes, which is in the middle of the Netherlands. It was finished at noon, and I returned home 170 kilometers by car. And now I'm thrilled to give a guest presentation for such a fantastic turnout. Thank you everyone again for showing. Now, right now, 2019, each month from September till June, we have at least 5 workshops in Belgium and 2 workshops in the Netherlands. Only in July and August, we don't have any workshops. We also have 4 Dutch webcasts each month. Twice a year, we are present at big investor events in Belgium. Here you can see some pictures of those events.
The pictures at the right of your screen were taken in Ghent, and the pictures on the left was in Antwerp earlier this year. The screen is massive. The room over there is in a cinema complex. It's always a pleasure to give presentations over there. We've seen an immense growth of the VectorVest community in Belgium and Netherlands. And despite the fact that it wasn't always easy to invest in European markets the last decade, we proved that VectorVest is a very powerful tool. And that's, I think, why our number of subscribers has increased significantly. Investing in stocks is not so popular in Belgium. It won't surprise you that football, or soccer, as some of you might say, is very popular here. Everyone loves football. Not everyone loves investing. There are some reasons. Many people lost money during the financial crisis, and they turned their back to the stock market. Our governments, they don't support investing. Au contrary, more about that later today. But if people ask me why I invest in stocks, it's easy to explain. One, it's a very interesting hobby, world economics, to analyze companies. I am a believer that you need both fundamental and technical analysis to succeed as an investor. And secondly, I also invest in stocks because I want to give the young kids a better start once they get older. But three, you are aware that every hobby costs you money. If you like to travel, that costs money. If you go to restaurants, that costs money. But investing in stocks, which is a passion for most of us, if you do it well, that's one of the few hobbies that doesn't have to cost you any money. Au contrary, you can gain money from this hobby. Okay, after this introduction, what are we going to do today? This is the agenda. Few investors and fund managers are able to beat the index. I will show you how powerful the relative safety indicator is. Can this one, the RS, can it beat the index year in, year out? I'm mainly going to talk about Europe, but I also want to show you my favorite US strategy. A good strategy, in my opinion, must have a nice compounded rate of return, not too many transactions in a portfolio of 10 stocks, limit the maximal drawdown, and also the strategy must be strong during severe bear markets. Well, the strategy which I will present to you today fulfill all these requirements. I will also present you 2 quality stocks in Europe with excellent fundamentals. And I will also show you 3 favorable strategies which you can find in VectorVest Europe. One interesting for the fundamental investor, one for the dividend investor, and then one strategy which is pure technical analysis. And Stan already mentioned it in the beginning of the broadcast. We do have a very nice offer that you can sign up for, and Stan will talk more about it at the end of my presentation. Okay, fair is fair. It has not been easy in Europe since 2007. Here you see the VectorVest composite for Europe since 2005. In the US, the market peaked in October 2007 before it collapsed during the financial crisis. In Europe, the market had peaked here in July 2007. I've drawn a horizontal line since the peak of July 2007, and as you can see, it took us more than 10 years just to break through the previous high of July 2007. So in January 2018, we got a new high, but as of today, the VVC in Europe is still lower compared to July 2007. Do you think this is no good? Well, wait till you see the graph of the Euro Stoxx 50. This is a chart of the Euro Stoxx 50, the index of the 50 main stocks in the Eurozone. As you can see, the Euro Stoxx 50 peaked here in July 2007. The index got to a high of 4,500 points. As of today, so more than 12 years later, the market is still only at 3,624 points, which means slightly less than 20% of its top in 2007. So you could ask yourself, was 2008, 2018 a lost decade for investors in Belgium? Well, you can see more of it here. Imagine that, which I will not recommend, but imagine that you buy each year, on the first day of the new year, you start with fresh enthusiasm and you buy a tracker on the Euro Stoxx 50 and you keep it till now. You see it here till October the 8th, 2019. This is the day that I prepared this presentation. So pure buy and hold. So I mean no market timing, no stop loss. What are the results? Well, you can see it here. Column A is the day of the first trading day of each new year. Column B is the price of the Euro Stoxx 50 on the first day of that year. For example, January the 4th, 2010, the Euro Stoxx was at 2,974 points. Or here at the bottom, earlier this year, and January the 2nd this year, the Stoxx 50 was at 2,982 points. In column C, you will see the price of the Euro Stoxx 50 on October the 8th this year, so the day that I prepared this presentation. And then in total, in column D, you will see the total return for the Euro Stoxx 50 since you purchased it until, from this day, until now, October the 8th, 2019. Example, when you purchased a tracker on the Euro Stoxx 50 in 2010, your total return after more than 9 years is only 15%, which is exclusive dividends. Pure buy and hold, no stop loss, no market timing. So it is clear that the last 12 years were no fun for the buy and hold investor who just bought a tracker of the main index. It wasn't certainly the easiest time to invest in Europe, but thankfully, as you will discover today, thanks to VectorVest, there are plenty of ways to make some good money, even in the European stock market. There are so many advantages which we have as a subscriber. We give you the confirmed calls up and down. The confirmed calls up, as you know, the last signal to get you in the market. Now, thanks to our own fundamental indicators, you can easily distinguish the quality stocks from the poorly performing stocks with weak fundamentals. That is why I prefer stock picking above an ETF. And our own stop loss, a combination of fundamental and technical analysis, will protect you from painful losses. My favorite indicator is the relative safety, and today you will discover why. When I present at workshops, I talk to investors who are not VectorVest subscribers. People often say that both investors and fund managers are not able to beat the markets, let's say the S&P 500. You can explain it that each year, weaker companies are replaced in the index by stronger stocks. Also, when you have cash in your portfolio, it gives you no return, while the indexes are fully invested. I can demonstrate you that our high relative safety stocks do make the difference, even for the most laziest investor, just for buy and hold investors. So no market timing, no stop loss. Again, I won't recommend it, but this is just to show you the power of relative safety. Imagine that you're an investor who don't want to spend too much time in his investments. So while personally I always look at the market timing signals, I always lose a stop loss. But imagine you don't want to spend any time on investments. Imagine you buy on the first day of the year and then you forget about everything. Well, then you can try this out. Purchase on the first day of the trading year, each year in Europe, just 10 stocks. Which stocks? Well, the 10 stocks with the highest relative safety. You keep them till today, October the 8th, and we are going to compare the results to the Euro Stoxx 50. So how does this work? In the stock viewer, I go back here to 2015, January the 2nd. I sort the European stock market on relative safety, and I select the top 10 stocks with the highest relative safety. You can see them here. Some famous names like L'Oréal, Heineken, and Novartis, and probably also some unknown names for most investors like Roon Clinicum and Teleperformance. What are we going to do? A quick test top 10 till today. What are the results? Well, you see them here. Those 10 top high RS stocks have together increased with an average of 78% since 2015 till now, while the Euro Stoxx 50 only increased with 8.3% during the same period. The top performer was the French stock Teleperformance, which increased 237%. Recordati, which is listed in Italy, and ASML Holding, a very popular stock in the Netherlands, both have risen with more than 100%. And then you have three more stocks who rose more than 60%. L'Oréal, Relax, and Heineken. By the way, L'Oréal, it is still a top RS stock. And on Wednesday, a couple of days ago, they reported excellent earning report. And the stock rose again with 7%. Now, if you're curious for all the results, well, you see them here. Like I said, when you purchase a tracker of the Euro Stoxx 50, 9.5 years later, your return is only 15.4%. But when you purchase our top 10 highest RS stocks in 2010, those top 10 stocks rose with an average of 119%. Pure buy and hold, no stop loss, no market timing. 1 year later, so since 2011, the Euro Stoxx rose with 22%. Our top 10 RS stocks rose with 100%. But take 2017, for example. Since then, the Euro Stoxx only rose 3.5%. Our top 10 RS stocks rose with 39.8%. Look at the green and orange colors. Green means the better results. So you see here that we not only beat the Euro Stoxx 50 each year, but look at the outperformance of the high RS stocks compared to the main European index. Now, as I said, I would never do it this way. I would only buy it, for example, during a confirmed call up. For example, in January 2016, we were in the middle of a 10% correction. So we had a confirmed call down. I would never buy on January the 4th, 2016. I would always wait till we got our first confirmed call up, which was early March. But this is just to show people that you're able to beat and hold. All these results are exclusive dividend, and I did the same exercise for the US, but then I took the top 20 RS stocks. Why the top 20? Because I think in the US you have way more quality stocks compared to Europe. But for example, I can show it to you if you go to the US. You can do this exercise at home. I select dates, the first date of a year. For example, I'll go back to 2015, January the 6th. No, January the 2nd, 2015. I first have to select an RS. And then I will do a quick test top 20. And you'll see that our top 20 high RS stocks have risen totally with an average of 78.9%, while the S&P has risen with 49%. I did this test the last 10 years, and just buy and hold the top 20 high RS stocks outperformed the S&P 500 9 times out of 10. Only in 2014, the S&P performed better than our top 20 high RS stocks. Good, let me go back to my slides. And just recently, on October the 8th, I had a quick look at the top 10 highest RS stocks in Europe. You see that here, that I ranked the whole database on RS. And as you all know, most high RS stocks, they pay a dividend. What is more important for me is the dividend sustainable? So I look at the payout ratio. I want companies with a low payout ratio. The best solution to find these stocks is to watch our dividend safety indicator, which I highlighted here. The dividend safety indicator, which is on a scale of 0 to 100, the higher the dividend safety, the more secure it is. In this list of stocks, so I have highlighted the dividend safety. And what do you see here? All stocks with the highest RS, they have a dividend safety between 86 and 98, which is just excellent. And are these interesting stocks? Well, look at the final column, the expected earnings growth. And you see that most of these companies, only not one, but the 9 others have double digits expected earnings growth. Now, later in this webcast, we will discuss 2 European stocks with high relative safety. Now, the main topic of this webcast is the European market, but still, I want to show you my favorite US strategy. What are 4 requirements so that I can speak of a great strategy? Let's say we use a portfolio of 10 stocks. First of all, I want, just like everyone else, a nice compounded rate of return. I'm not going to look for extra risk, nor I want to minimize risk, but still I'm only satisfied with a nice compounded rate of return. Secondly, the maximum drawdown may not be too high. If the market and your portfolio crashes 50%, well, then your portfolio has to rise 100% just to get break even. However, if your portfolio only falls 20% during a bear market, then your portfolio has to increase only 25% just to get break even. Everyone loves to talk about their wins, and that's human, but most important for an investor is to minimize losses. So with our backtest from 96 until today, I'm striving for a maximum drawdown, which is not too high. Furthermore, I want to limit my transaction. I will use a portfolio of 10 stocks, and I will explain in a minute why I want as few transactions as possible. And last point, I always backtest my strategies, and I start at the top of LA. How can you test, or can you really test a strategy on its strength? Just start the backtest at the top of a bull market. I let the backtest run until the bottom of the bear market. In other words, how will my strategy perform between October the 15th, 2007 until March the 9th, 2009? During that span, the S&P fell 55%, and I want a strategy to limit the losses. Now, Belgium has mostly long-term investors. Each transaction costs us 0.35% tax. That means if you buy and sell a stock within a day, it will already cost you 0.7% on taxes. Now, we live in a small country, only 11 million people. A small country means more expensive brokers. I read an article about a broker who doesn't charge any fee to their clients if they do transactions. Well, we can only dream about that in Belgium. What a contrast it is. Transactions fees for an online broker might be here 20 euro for a transaction of 4,000 euro. But if you purchase your stock at one of the big main banks, the tariff will go up to 40 euro just for transactions of 4,000 euro, which means 1%. In that case, If you buy and sell a stock in a day, you already lose 2% on transactions fee, and then you also have to pay 0.7% on tax. That's already 2.7% worst case scenario, but still it is a lot. And those are the main reasons why Belgians try to limit their transactions. They prefer quality stocks, who rarely get a sell recommendation, and the advice is let your profit run and cut the losses. And where do you find this kind of stocks? You can guess it. Rank the database on relative safety. So I'll go into VectorVest software and I go to my tab portfolios. So each month I present workshops in Belgium and the Netherlands. The first part is always for non-subscribers, people who are relatively new to VectorVest. Then we speak about the basics. How do you decide when to enter the market? How does VectorVest analyze stocks, both fundamental and technical? What is a stop loss? And so on. Now in part 2, after the breaks, I always have to keep it interesting also for the people who already come over several years. So for them, I always build a strategy and then I show the results of the strategy. I always backtest a strategy with at least 50 different stop losses, and I use different market timing signals, like the confirmed calls, the DW, the primary wave, and so on. The people who attend the workshop, they always receive the slides afterwards. Now, let me give you some examples. On top, you see the model portfolios, but for example, the workshop that I presented in September this year, I gave a presentation about the FDOB strategy. You'll see the graph when he wants to load, at least. Okay, this is the graph of the FDOB strategy. Now, for the US, I'm able to do backtests since 96, so I always do it since 96 till today, till 2019. We get here a 15.6% compounded rate of return with 23 transactions a year, exclusive dividends, so the real return is somewhat higher. I see, for example, here that on the first column is the purchase date, and I see earlier this year in the US with the confirmed call up, several stocks were bought. I see here ANSYS has risen 36% this year. Cadence has risen 41%. Kansas City, the ticker KSU, has risen 33%. And Synopsys, also a very interesting stock, has risen 49% since January this year. Now, if you want to know more about, for example, this strategy, the people who attend my workshops, they can follow it, and then we click on details. Your browser will open, and then you will see what market timing signal, for example, that I used. In this case, the confirmed calls. I use, in this case, a 21% trailing stop loss. Now, you might recognize this FDOB strategy because of the name. And because, if you click on fill mode, you'll see here the parameters, and you'll see that we rank the stocks on RS descending. This is a stock of the Worry-Free Investing Challenge. And my favorite strategy, which I'm going to present today, is also a strategy that ranks the stocks on RS descending. Yes, it is also a strategy from the Worry-Free Investing Challenge, which was organized by VectorVest in 2016. My favorite strategy is the BLR strategy. I first presented this strategy on a workshop in September 2016. I do then the backtests, and afterwards I convert into a portfolio so I can keep following this strategy. The market timing signal that I use are the confirmed calls. So again, if you click on details, it will open the browser, and I'll use the market as a market timing signal, the confirmed calls. We are going to talk about the parameters in a minute. The stop loss was a 25% trailing stop loss. Yes, it is a wide stop loss, but it will make sure that I can let my profit run during years, and in crashes like the 55% bear market from 2007 till 2009, it will get me out in time. Now, what are the parameters of the BLR strategy? We're gonna look for stocks who have a current price of at least $100. The 50-day moving average volume must be higher than 1 million average volume at least. The stock must be listed on the Nasdaq, the New York Stock Exchange, of the American Stock Exchange, and the stocks must be optionable. Here it is the other way around. The parameter says the stock may not be listed on these indexes. I always turn it around. So the stocks that we're going to look for have to be listed on Nasdaq, New York Stock Exchange, or American Stock Exchange, and they need to be optionable. We exclude ETFs. The stocks must have a positive sales growth in the last 12 months. And then a technical enter point, when you want to enter. The stock today needs to be higher than the high of yesterday. Okay. In a confirmed call down, I don't go short, I don't go cash, I just remain in the market. I don't do anything, I just respect my stop loss. Now I go back to my PowerPoint, and here you see a screenshot of my portfolio. So this is BLR, and you're all gonna get from Stan all the slides afterwards, so you can have a look at everything. BLR, I first presented it in September 2016. The graph looks impressive, and so we are going to have a closer look at the graph. When I did first the backtest, it was indeed until 2016. At that time, I did convert the backtest into this portfolio so I could follow up the performance of this BLR strategy. You see the horizontal line here in 2002, 2003, and again in 2008, which made sure my max drawdown was limited to 25%. Now in 2016, which is, just have to close a little thing here. In 2016 here, the value was $2,200. Today, it has risen until $3,438,000. You see that the value of the portfolio collapsed in the last 3 months of 2018. Now, several indexes just barely got into a bear market. Some indexes fell 20%. But BLR strategy, it quickly recovered and it quickly set new highs this year. So the original backtest was from 96 till 2016, but today, where are we 3 years later? What are the results? If I calculate the compounded rate of return from 96 till today, the present value, no, the value in 96 was 100,000. The value now is 3,438,000. Over 23 years, the result is an impressive 16.6 compounded rate of return. That's impressive if you realize that dividends are not included. The portfolio has 10 positions, and what is also impressive to me is that this strategy only does 12 transactions a year. During bear markets, our portfolio was 100% totally cash. That means that in some other years, we only had very few transactions, way less than 12 a year. So here you see the transactions again. The stock must have a price of $100, more than 1 million volume. We only gonna buy on the Nasdaq, American Stock Exchange, New York Stock Exchange, and stocks must be optionable. I exclude ETFs. The stocks must have a positive sales growth, and today the stock price must be higher than the intraday high from yesterday. Where can you find BLR? In the map searches worry-free investing strategy. Here you see a summary of everything, which I already showed you. So we use the confirmed calls, voilà, from 96 till 2016. Here it explains what is a confirmed call-up. You can read it at your own pace afterwards. In a confirmed call up, we're going to be long with the search BLR. The stop loss is a 25% trailing stop loss. And with more settings, I go for 10 positions. I automatically replace closed positions in a confirmed call up. And this is special. We only open maximum 4 positions in a day. For the rest, don't close any open position. Invest over average portfolio value, which are quite normal things. Odd lots, limit repurchases, maximum 2 stocks per industry, and maximum percent of stocks average volume is 2%. In a confirmed call down, we stay in the market. So that means we leave existing positions open. Unless the stop criteria is met, then we're going to sell the position. But very important, we do not open new positions in a confirmed call down. And then we have a look at the current portfolio. So in 2019, which our stocks are today in portfolio. It's always interesting to see. The first column is the purchase date. The last column, which is always also highlighted, is the return on investment. Avalon, for example, the second stock in portfolio, is already 9 years in the portfolio. Estée Lauder has been 8 years in portfolio and it has risen 269%. McDonald's is in portfolio since 2012. And then a couple of stocks which were added later. Pfizer, for example, has been in portfolio for 3 years, and the stock in 3 years has risen 103%. Intuit, in portfolio since 2007, up 101%. That's what I mean when I always say to people, let your profits run. Now, in January this year, with the confirmed call up, Lululemon was added to the portfolio, and Lululemon is already up 38%. And also added in January earlier this year was Visa, up 28%. Look at the bottom part here of the screen, and there you see the same stocks, but you see their fundamentals. And then it's interesting to see the relative safety, which I've highlighted. The lowest relative safety is for McDonald's, 1.29. Now, McDonald's is already in portfolio since 2012. But 6 of those 10 stocks have a relative safety of 1.43 or higher, and that is excellent. Now, if you want to copy this strategy and do a backtest at your home, please do realize that you can get other results. The reason I did this backtest in a workshop in 2016, stocks were purchased and sold, but since 2016, some of these stocks, which were purchased in the past, have been delisted. And that means that they disappear from our database. That means they won't be purchased again if you run the backtest today. So you will not get the exact same results as I do. For example, Express Scripts, the ticker was ESRX, was delisted after a merger with Cinia. And LinkedIn, as you know, was delisted in 2016 after a takeover bid from Microsoft. I also saw that Monsanto was added in the portfolio in the past, and that stock has also been delisted. These stocks, they appeared in my trade history, but if you run it today, they won't get picked up again, and that's why you will get other results when you do the backtests. Now, how does this strategy perform during bear markets? For me, it's very important how a stock performs during a bear market. This is the ultimate test for a strategy. So, we are going to do this BLR strategy. We are going to enter on October 15th, 2007, the day that the S&P peaked before the bear market began. So what I'm going to do, I'm going to scroll to a BLR strategy which I have backtested. And I'm just going to copy the settings. So copy. I'm going to name it Stan BLR webcast. My entry points will be 2007. The peak of the S&P was on October the 15th. And we're going to backtest until the bottom of the bear markets, March the 9th. I click on OK. Let me check. BLR trailing 25%, 10 positions. The date is fine, so I'm going to finish and run it. So here you see Stan BLR backtests from October 2007 till March 2009. This backtest gave us a loss of 19.7% with a drawdown of 24.7%. Now, this is the backtest. So you see 3 weeks after the peak in the market, we got a confirmed call down. We are in the market. In April 2008, we get a confirmed call up. June the 11th, 2008, a new confirmed call down. And here, early October, we are fully cash. We got a confirmed call up, a false signal maybe, on January 2009. But while the S&P fell until March the 9th, we see that our strategy already starts to rise. If you want to check it at home, this might be better view for you. BLR during the bear market from October the 15th till March the 9th in 2009. Excuse me, this is a small typo. This should be 2009. You can see that on the graph. The S&P fell 55%, while BLR only gave up 19.7%. So I guess you can see why I absolutely love this BLR strategy. He always finds quality stocks to me. You don't do many transactions, and BLR proves his value during bear markets. Which stocks appear today when you run BLR? Well, then we go to the Unisearch. Searches if I challenge BLR, if I run the search, you'll see some lovely stocks, and I mean really lovely stocks. I'm going to talk about this one a little bit later. This is Rosters. Look at Rosters in 10 years. Fabulous stock. For example, I have Visa in 10 years. Look at this, from $20 till $180. Accenture, lovely graph, also over 10 years. And then I also have Google. So each time in a confirmed call-up, I always check high RS stocks, and I always check the BLR strategy. Now, that is pure personal. Everyone has to make his own decisions. Good. Now, I'm going to present to you two interesting European stocks who both have a high relative safety. The first is Teleperformance. It is an omni-channel company headquartered in France. The company, in short, specializes in outsourced omni-channel customer experience management, also known as BPO, which stands for Business Process Outsourcing. Teleperformance offers you a global network of talents, competencies, and assets. The company provides customer acquisition, customer care, technical support, debt collection, social media, other services around the world. The company was founded in 1978 and has 300,000 employees across 400 contact centers in 80 countries, while it also serves over 170 markets. The services are operated in over 265 languages and dialects on behalf of companies in various industries. The stock is being listed on the Paris Stock Exchange, Euronext Paris, since January 2007. Here you see the shareholding structure. The company has 58 million of stocks, and 88% of the shares are in the hands of institutional investors. The revenue rose 9% year to year. In October 2018, Teleperformance had a takeover bid over a company Intelenet, and Teleperformance states that the takeover bid was successful. Intelenet was responsible for 105 million euro in sales. EBITDA also rose from the same pace of the previous years. Teleperformance has a dividend of €1.90. It also has a very healthy payout ratio of 36%. At the bottom, you see the dividend indicators of Teleperformance in VectorVest. Compared to a stock price of €201, the dividend yield is not so high at 0.94%. Now, thanks to the low payout ratio, the dividend safety is at an impressive 91 on a scale of 0 till 100. VectorVest expects that the dividend will grow 15% next year. In total, the dividend master indicator, YSG, which stands for Yield Safety Growth, is at 1.16, which is good. On this map, you see that Teleperformance is active worldwide. Like I said, active in 80 countries and serving in 170 markets. Well, today we are Saturday, November the 2nd, and in 2 days, on Monday, November the 4th, it will be the day that Teleperformance will report their revenue numbers for the third quarter. So always something to look forward to. The full annual results will be given on February 26th next year. Good, let's see what VectorVest has to say about Teleperformance. So I open VectorVest Europe. I go to the viewers page and I enter Teleperformance. The ticker is here, as you can see, TEP.PA, and PA stands for Paris. I open the stock graph and I'm going to extend it till a little bit more than 7 years. I remember the beginning of the presentation. I hope you have not run away if you saw the returns that the Euro Stoxx 50 gave you. Well, that's where VectorVest make the difference. Don't you just love this graph? This is an example that there are beautiful quality stocks in Europe. This is a weekly graph. So we see on top the recommendation, you see green from buy and white from hold. The price itself, it went from €19 in 2012 up till €203 today. Let's put the value on it. The stock was most of the time fairly valued. Only the last year and a half, the stock has been overvalued a bit. On the other hand, and I prefer RV, the long-term price appreciation indicator, it is in positive ground on a level of 1.18, and it has been in positive ground during more than 7 years. But look now at the relative safety. This is stunning. During 7 years, it has always been above 1.30, except a very short time here in the beginning, 7.5 years ago, and also last summer. But recently, it has climbed it back to a level of 1.37 today. The earnings growth, expected earnings growth, is at a nice 18% today. And the EPS, as you can see, is steadily rising. Look at the graph. This is the type of stocks that you would want to have in your portfolio. Do you love this kind of graphs? Just sort the stock viewer in US, in Europe, in other databases on RS descending many companies just like this. Now, I have one more interesting company that I want to show you, and it is called Safran. Safran is an international high-tech technology group operating in the aviation, defense, and space markets. It has a global presence with more than 95,000 employees and sales of 21 billion euros in 2018. The home base is Paris, France, and the biggest parts of its sales are in the US. Europe is good for 26% of its sales, and Safran is also active in Pacific Asia, which is good for 15% of its revenue. It is listed in the French main index, the CAC 40, and it is also listed in the European Eurostoxx 50 index. Safran is divided in different divisions, as you can see here. Aerospace propulsion is good for 50% of the revenue. Aircraft equipment, good for 26% of the revenue. And then we have defense, aerosystems, and aircraft interiors. On May the 23rd, earlier this year, Safran's 2019 annual general meeting of shareholders approved a dividend of €1.82 per share. And here you can see the historical dividend of Safran's per share. You see that the dividend increases each year, with the exception of the middle of the 2008 financial crisis. The dividend of €1.82 gives you a current dividend yield of 1.3%. Also, that may seem a little bit low, but it is because the stock has been rising. Last year, the dividend yield was still at 2.4%. What else? Well, oops, that was too quick. What is very good is the very low payout ratio, which result in a high dividend safety of 96, which is just excellent on a scale of 0 to 100. Safran has an earning yield of 4.68, while the dividend yield is only 1.27. VectorVest expects that the dividends will grow next year with 15%. In total, it has a YSG, the master dividend indicator, of 1.21, which is very good. Safran also has a buyback program currently of €450 million. Here you see Safran's capital shareholding structure. It is divided by an 11% stake held by the French stake, another one held by employees and former employees, and the stakes held by individual and institutional shareholders, public. There are some interesting news about Safran. It works alone or in partnership and is leader in different markets. It does a lot of R&D so they can keep up to date to the quick changing demands of the market. I looked it up, and in 2018, Safran had R&D expenses of €1.5 billion. The company had quarterly results on September the 4th, and the results were excellent, which may not be a surprise since Safran is one of the highest RS relative safeties indicator of the European databases. It has recorded significant improvement in its operational performance. The company reported an adjusted revenue growth of 27%, and we very much like the strong organic growth of 14%. Here you see more impressive results of Safran. Investors were thrilled with these results, and on Thursday, September the 5th, the stock rose with 5% on these great results. The day after, Safran rose another 3.5%. Now, Safran, it reminds me a little bit of one of my favorite stocks in the US database, and that is this company. We're going to compare the stocks. So here you see that in 10 years, if he wants to load in, I may maybe already open the graph of Safran as well. So let me check. Okay, Safran in 10 years. So I'm going to compare it to Rostock's beautiful graph. The stock in 10 years went from 10 till $110, which is really impressive. And have a look at Safran. 10 years ago, it was at 12, but it rose until 143. So if you're impressed with Rostock's, you definitely should be impressed with Safran. If I gonna make it a little bit more short term, let's say on 3 years, We see here on 3 years, Safran has never been on sell, always got a buy and hold recommendation. And then I put the relative safety on. It has been now on several years on a high level. And don't you think that this was a nice entry point? In July 2017, the relative safety completely broke out from a level of 0.95 till here 1.40. At that time, the stock was at 83 euro, and it just started to get going from 83 till 143 euro. So, do you need to pay attention? Yes, when you see the relative safety of a stock breakout, I always pay attention for it. I keep it in my Unisearch. Regularly, I run a search, and then I keep following, I start following these kind of stocks. Is it all good and well? Well, the stock is slightly overvalued, and the relative value is has fallen a little bit to a point of 1.05, which of course is not excellent. But as long as the trend is your friend, it is a very interesting stock in case that you have it in your portfolio. Then we go into the last part of this webcast, and we're going to look into 3 European strategies, which might give you some ideas to test out in other markets or just use it in Europe to select European stocks. I have a fundamental strategy. I have a strategy which we're going to keep take into account the dividend indicator, and then I also have a pure technical strategy. All of 3 are model portfolios in Europe. The first strategy is a fundamental strategy. It is called Tom's Value Breakout, and you can find it in the Unisearch in the map Bear Market Beaters. We're going to find undervalued stocks with above average price appreciation, sorted by the best combination of VST. So we are going to look to stocks whose value has increased more than 25% in the last 13 weeks. The relative value needs to be higher than 1.1, and the value divided by price must be higher than 1.2. As a market timing signal, we're going to use the green light buyer, and we use a rather strict stop loss. We sell our positions with 30% gain, and we take our losses at 30% loss. We always stay in the markets, but we only buy at a green light buyer up signal. And here you can see that this model portfolio is up 110% since January 2015. Keep in mind what the Euro Stoxx 50 has done since January 2015, which is a rise for the Euro Stoxx 50 of plus 8%, and this model portfolio has gone up 110%. Not only that, if you're going to see the performance of this model portfolio in 2018, that is here, minus 2%, while the Euro Stoxx 50 in 2018 was minus 15%. Then I'm going to quickly show you some examples of stocks whose value has risen by at least 25% in less than 3 months' time. So I'm going to VectorVest Europe. The ticker is MUV2.de. It is, let me open the graph. The company is called Municher Rückversicherungs. It is an insurance company. And I'm going to put the date line on February the 5th, earlier this year. Stock price was 198 euro. Since that time, it has risen to 249 euro. Let me put the value on it. And here you see what happened. 3 months earlier, so on the end of November, the value here was 160 euro. You see that here to the right. 3 months later, February the 5th, the value was 254 euro. So the value broke out and the stock price just followed. We also see on February the 5th or the 7th that we have a relative value of 1.28, which is above the required 1.10, and also the value divided by price ratio was well above 1.20. Is the stock still interesting today? So if we're going to look at today, well, VectorVest do think so. The relative value is 1.40 and the relative safety is at a very nice 1.31, which is the highest level in 13 years. The stock has not received a sell recommendation in more than 3 years. So this is 3 years. It has not received a sell recommendation, although you see it has only just been rising this year after the value broke out. More interesting is it has a dividend yield of 3.7%, so a very nice dividend stock. I have another example, and that example is Talanx. The ticker is TLX. It is also in Germany. And the same story, if I go to February the 5th, earlier this year, you see price 33, value 40, and you see that a couple of months earlier, the value has broke out. The stock is still undervalued as of today, and the stock rose from here 33 euro till 41 euro. Is the stock still interesting today? We have a relative value of 1.31, which is very good. The relative safety is not the highest one. It's decent at 1.12. And the stock Talanx has an expected earnings growth of 18% with a low price earning of only 10.6. Does it have a dividend? Absolutely. It has a dividend of 3.49% with a dividend safety of 70. And currently the stock is trading above both its 50 and 200-day moving average. We stay in Germany with a last example. And the ticker here is VIB Vermogen. Look at the graph. We go back to February the 5th or the 7th, doesn't matter, for a couple of days. We put the value on it and you see that the value broke out and the stock, it just followed. Now, if you like German stocks, then what you have to do is go to the viewers, for example, exchange watch lists. First, I'm going to show you the index watch lists. If you click on the DAX, you'll see the 30 stocks from the German DAX exchange. However, as I have shown, there are more interesting stocks than 30 German stocks. And where do you find them? Just go to exchange watch lists, click on etc. And you have there almost 400 German stocks in this watch list. Good, time is almost running out, so we go to another interesting search in Europe, a search where we combine the best of both master indicators. What do I mean with master indicator? Well, everyone knows the VST, but I will also use the dividend master indicator, which is YSG, where the Y stands for yield, the S stands for safety, and the G stands for growth. This is a search. We need an average volume of 50,000 or higher. The stock price must be above 1. Expected earnings growth is at least 11%. Nothing special so far. We are going to rank the stocks on VST multiplied by CI, multiplied by RT, multiplied by YSG. We use the market as market time, use the confirmed calls, and as a stop loss, we just have the VectorVest stop loss. Here you have all the settings if you want to copy it in a backtester. And what are the results? Well, the model portfolio has risen 462% since 2005. You see it went timely in cash during the 2008 financial crisis. And also very interesting here, look at 2018. In the year that the German DAX fell 18%, this model portfolio rose. On January the 2nd, 2018, the value was 510,000 euro, and 12 months later, the value was 547,000 euro. We had a confirmed call down in Europe last year since June. Our model portfolio was fully cash on October the 12th, the moment that it was really the start of the major correction, the correction which lasted till Christmas Eve, December the 24th. So our model portfolio was 10 weeks in cash during this heavy correction. One of the major advantages of VectorVest, if you follow the rule, never buy during a confirmed call down, you respect your stop loss, well, then you are protected in major corrections or bear markets. You can find the search in the map, searches, special search. And then finally, a third search, pure technical analysis. First of all, as I already told you, 2018, not the best year for stocks worldwide, especially not in Europe. Why? We not only have the tension between the US and China, but in Europe, we also had to deal with uncertainty about the Brexit. We also had tensions in the Italian government, a government which was not really pro-Europe, and that is an understatement. That resulted in a very bad stock market. The Euro stocks went down almost 15%. Our Belgium index minus 18%. The VectorVest composite in Euro minus 13%. So you wonder, were you any chance that you were able to make profits with VectorVest in Europe in 2018? Well, absolutely. Our model portfolio, Comfort on the Move, rose 6% in such a terrible year. And what are the parameters? We're gonna exclude penny stocks, of course. We want to have enough volume, and we exclude ETFs. What is the key? We're just gonna multiply this, or we're gonna sort the stocks R3 multiplied by comfort index. So this is pure technical. As a market timing signal, we use the confirmed calls. What is the stop loss? We use a 15% trailing stop loss. I see it's almost 6 p.m. After 6 p.m. almost in Belgium, that is. So if you want to do this backtest, Stan is going to talk to you about the nice offer that we offer to you in a moment. But these are the summary, the overview. So we're going to use the confirmed calls. We use the search comfort on the move. We use a 15% trailing stop loss. In a confirmed call down, we just stay in the market, and we only sell when stocks go through their 15% trailing stop loss. What are the results? Since 2005, this portfolio is up 660%. And also last year, in the very difficult year, it rose 6%. And then let me check one more thing. If I'm gonna go to Europe today, and let me check, where is my RT multiplied by, hold on, the viewers. I must go to the stock viewer, and we're gonna rank, because I have one nice story about one stock. We're gonna rank the whole database by RT multiplied by CI. Do I look over it, or here it is, RT multiplied by CI. And the top stock is Varta. Varta, I'm going to open the graph in a minute. RT today 1.78, CI 1.96. Look at this graph. Varta is so German, known for micro batteries. the stock is listed in VectorVest since April this year. So it has only been in VectorVest since April this year. The stock in this period went from 37 till 105 today. The stock got a buy recommendation here on June the 12th, and the buy recommendation is still in place today. It has a lovely relative value of 1.42 and a very good relative safety of 1.31. Expected earnings growth 37%. And despite the fact that the stock has risen so much this year, the stock was awarded with a nice win of 7% on Wednesday when Varta reported quarterly results. What is the secret behind the success of Varta? Well, you can find them in the hearing aids, also from Samsung and Sony. And there are whispers that Apple is also a customer of AirPods, but the company doesn't want to confirm this. Apple keeps its supplier secrets, but people in the know see a link between the newest AirPods Pro launched earlier this week and the increased activity at Varta. The company has increased productions twice already this year. Moreover, the new AirPods Pro would be even smaller than now, and the newest batteries models from Varta are also considerably half a dime smaller. Voila. On this slide, so I've already told this, that the model portfolio is up 660% since 2005. Now, there are plenty of other searches and possibilities in Europe. For example, and I heard Stan talking about it, and it is also one of my favorites, RS multiplied by CI. If you do that this year, the whole database this year, RS multiplied by CI, just gonna go back to to January the 2nd this year. The top 10 in 10 months is up and a very impressive 35% today. So as you can see, plenty of opportunities. I would say rank the database on relative safety, have a look at the model portfolios, rank the database on relative safety multiplied by comfort index. There are so many different possibilities to find quality stocks within VectorVest. I would say stay tuned because Stan has an interesting offer for you. Ladies and gentlemen, I would like to thank you for your attention during my guest presentation. I hope you liked the presentation. It's been an honor to present for you, and many thanks also for Stan for inviting me as a guest speaker. I wish you a pleasant weekend wherever you are, and I wish you lots of success with all your investments. Thank you very much.
Well, Tom, thank you so much for just an amazing presentation. The comments that are coming in are just fantastic, stunning presentation. Just everybody's really enjoying it. So thank you so much for that. We definitely want you back, and not too far from now. so thank you so much for that. A lot of great ideas. I think Lara might have said it best. Great presentation, especially for the long-term investors. But really, your results show, even in the short term, some amazing gains. So thank you for that, Tom. I'm going to request the slides back. I'll just revisit the offer that we have for everyone, and I'll show that in the slides. So I'll take back the the presentation here somehow. Okay, there we go. And I'm going to show my screen. Go. So this is the offer. Now Cam was having trouble with this, with the link that I posted in the chat box. It's vectorvest.com/try EU. You can take advantage of this offer for another few days, and it'll give you VectorVest Europe for 30 days. You can try out the strategies that Tom has shown us, and read the essays that are there, and learn more about the European market. And if you decide to continue after 30 days, you will need to call VectorVest and arrange to purchase another country. I believe a third country will cost you, well, VectorVest will give you the rates, but typically it's around 189 US dollars to take advantage of a new country. But you can try it out for 30 days, no credit card required, and I think you're going to love taking advantage of the strategies that Tom has shown us. Tom says the link worked fine for me. And Erwin says, I can see why Tom is such a popular speaker. Very well grounded approach, taking safety first, and really knows how to get the most from the market in good times and bad. Valuable presentation. Thanks, Tom and Stam. And that's coming through loud and clear. And I had a question about whether the slides would be available, and we do make them available. Typically the next day, you'll have the slides and the recording link. If you don't get it, it's because when you registered for the broadcast, your email may have been typed in incorrectly or something like that. John says, super, Tom, and very encouraging. So that's great. So yeah, and another comment, Tom opened up a whole new investment idea. So pretty amazing. Kamal says, I'm going to trade these strategies starting in the US. I found it quite stunning and amazing. So again, pretty terrific strategy. Somebody asked what the BLR stands for, and that was the initials of the creator of that strategy that Tom showed us. So there you go. Lots more comments coming in. Tom, in 2008, a question came in from Julian. Why didn't you tighten stops during that confirm down? Just a quick comment on that, if you're still with us there. I think you are. Let me just get the mic.
Well, the thing is, I've seen it. It only got 12 transactions a year, and the amazing thing is that some stocks, when you got 25% trailing stop loss, they were in your portfolio for 4, 5, 7 years. And okay, I know when you have a bear market, 25% trailing stop loss is rather large. So you give up some of your gains, but on the other years, those stocks, they remain in your portfolio maybe during 4, 5, 7 years. I've seen some stocks since 2017 in my portfolio in this BLR strategy, already up more than 100%. If you take a tighter stop, let's say 15% stop loss, you lose these stocks and you might not get them back in your portfolio. So you have to consider, do I use a rather tight stop loss? But also in Belgium, we have lots of taxes if you do many transactions. And that's why we are more long-term. Now, I do know that we give up more of our gains compared to when you use a tighter stop. But fortunately, there are more up years than down years.
Thank you, Tom. And again, you're getting dividends during that whole time as well. So that's kind of buffering things a little bit. And of course, if you know options, you can protect a little bit with some put options. Because I mentioned to somebody in the chat box, Dr. Toledo wrote about the coming bear market as early as November 2007 and offered lots of ways to protect and hedge with contra ETFs and options. So there you go. By the way, this offer, by the way, somebody asked what happens after the 30 days. Nothing happens. Your credit card does not get charged. There's no auto renewal. You just have to call VectorVest if you would like to continue with a subscription to the euro, and it's I believe it's about $189 US, but best always to call support and find out. Everyone, thank you so much. I think this has been a great event, and I really want to say thanks again to Tom for just an outstanding presentation. I see that throughout the chat box here. Thank you for your comments. And also, thanks to Bill Shelton. He's been answering a lot of your questions in the background, and always appreciate that. So if you're new to VectorVest, you can give us a try. Call 1-888-658-7638. It's just $9.95 US for 30 days. And of course, with this offer, you can try the euro. If you live in Europe, you can try the European database for free by using the link in the chat box, the vectorvest.com/try EU. All right, so thanks everyone, and thank you again, Tom. And we'll look forward to seeing you in December. December 7th is what we have planned, and we hope to see you there. And thanks again for joining us, and thanks again to Tom and Bill, and have a great rest of your weekend, everyone, and all the best.